Have you ever wondered how companies lose crores of rupees even though they have auditors? The truth is, fraud doesn't always involve sophisticated hackers or movie-style scams. Most frauds start with a small weakness in internal controls, one fake invoice, one fake employee, or one manipulated journal entry. Hi everyone, welcome back to the channel. If you are a CA final student, an article assistant, preparing for CA final interviews, or are already a CA in practice, this video is for you. Today I will share 5 practical fraud cases that every auditor should know. For each case we will discuss what happened, the red flags, the audit procedures, the relevant standards on auditing, and some interview tips. So let's begin. Case 1. The fake fraud vendor. Imagine you are auditing a manufacturing company. Everything appears normal until you notice one supplier receiving regular payments every month. The invoices are approved, the purchase orders are available, the payments are properly authorized. But when you verify the supplier independently, you discover something shocking. The supplier doesn't exist. An employee created a fake vendor in the ERP system and transferred company funds to a personal bank account. Red flags: recently created vendor, some bank account used by multiple vendors, round value invoices, frequent purchases without proper quotations. So what should the auditor do? Verify the vendor's GST registration, PAN and address. Review vendor onboarding documents. Check for duplicate bank accounts. Send an external confirmation to the supplier. Review unusual payment trends using analytical procedures. Relevant standards: ASA 240, Auditor's responsibilities relating to fraud, ASA 315, identifying risks, ASA 330, responses to risks, and ASA 500, Audit Evidence. Interview tip: if an interviewer asks, how will you detect a fake vendor? Don't stop at invoice verification. Explain your approach. Understand the process, verify documents, opt an independent confirmation, analyze transactions, and maintain professional skepticism. Case study 2. Cash lapping fraud. Let's move to the second case. Suppose customer A pays rupees 2 lakh today. Instead of depositing the money into the company's bank account, the cashier keeps it. A week later, customer B pays rupees 2 lakh. Now that money is recorded as customer A's payment. The cycle continues, making the fraud difficult to detect. This is known as lapping. Red flags: delay in depositing cash, long outstanding receivables, frequent manual adjustments, differences between cash receipts and bank deposits. Audit procedures: conduct a surprise cash count, match cash receipts with bank deposits, obtain data confirmations, review aging reports, perform analytical procedures on receivables. Relevant standards: ASA 240, ASA 515, external confirmations, ASA 520, analytical procedures, and ASA 500. Interview tip: cash is always considered a high-risk area because it is the easiest asset to misappropriate. Whenever you answer a cash-related question, mention surprise verification and independent confirmation. Case 3. Inventory theft. Now imagine you are attending the year-end stock count. The warehouse records shows 5,000 units, but when the physical count begins, you only 4,200 units are available. Where did the remaining inventory go? Employees manipulated inventory records while stealing goods over several months. Red flags: high inventory adjustments, excessive wastage, negative stock balances, falling gross profit despite stable sales. Audit procedures: attend the physical stock count, perform surprise inventory verification, review inventory movement reports, compare physical stock with ERP records, investigate significant shortages. Relevant standards: SA 501, Audit Evidence for Inventory, SA 315, SA 330, SA 500. Interview tip: a common interview question is, why should an auditor attend stock verification? Your answer should be, because physical verification provides direct evidence about the existence and condition of inventory and helps identify discrepancies. Case study 4: Ghost employee fraud. This fraud is surprisingly very common. The HR manager creates employees who don't actually exist. Every month, salaries are processed and transferred to bank accounts controlled by the fraudster. Since payroll is automated, nobody notices. Red flag: duplicate bank accounts, missing attendance records, employees without personal files, salary paid after recognition. Audit procedures: match payrolls with HR records, verify attendance, review employee files, check salary bank transfers, look for duplicate bank accounts. Relevant standards: T and SA 520. Interview tip: whenever payroll is discussed, mention segregation of duties. The person creating employee records should not be the same person processing payroll. Case study 5: revenue recognition fraud. Look at one of the most examined topics of CA Final. Imagine it's the last week of March. Management wants to achieve its annual target. Goods lying in the warehouse, but sales are already recorded. In April, many of those sales are cancelled. This is premature revenue recognition. Red flags: sharp increase in year-end sales, high sales returns after year-end, missing dispatch documents, unusual credit notes. Audit procedures: perform cut-off testing, verify dispatch documents, review subsequent sales returns, obtain customer confirmations, review contract delivery items. Relevant standard: SA 240, SA 315, SA 330, SA 505, SA 520. Interview tip: remember, this is for both interviews and exams. Under SA 240, revenue recognition is presumed to be a fraud risk unless the auditor can justify otherwise. Mentioning this point demonstrates strong conceptual understanding. One final exam hack. Whenever you are asked a practical fraud question, structure your answer like this. Explain the fraud, identify the risk, mention the internal control weakness, state the audit procedures, quote the relevant essay, explain the audit evidence obtained, and conclude with your findings. This structure works well and leaves a positive impression. Fraud doesn't begin with 110 crore scam. It usually starts with one overlooked weaknesses in the internal controls. As auditors, our responsibility isn't just to tick documents, It's to question unusual transactions, gather sufficient appropriate audit evidence, and apply professional skepticism throughout the audit. If you found this video helpful, please like the video, subscribe to the channel, and share it with your friends preparing for CA final, articleship, or audit interviews. Also, let me know in the comments which practical topic would you like me to cover next. Thanks for watching, and I'll see you in the next video.